Hi guys, and welcome to Freckle Finance. Today I'm going to talk to you about the investment strategy called growth investments. This type of investment strategy focuses on capital appreciation, and what capital appreciation is just an increase in the price of the stock. So individuals who invest in growth investments, what they do is they invest in companies that have a higher than average growth within their company. So this is a bit similar to value investing, which I just did a video on, and that value investing is assessing the company, which is basically assessing the stock based on the company's finances, but a growth investment is based on the potential growth or the growth of the company. So they're similar, one's based on the finances, the other one is based on the growth. That doesn't mean that the company can't have both, because it still can. Some people actually don't consider growth investments to actually be different than value investing, because you're basically taking a company and assessing its future potential. Now, yes, value investing is the future potential, assuming that it's undervalued, and growth investments is taking its current assessment and saying that it's growing and it's going to continue to grow in the future. A common industry that people will purchase stocks in for growth investments is in the emerging market industries. And that's because these are new industries that are newly created and there is a lot of potential growth. But like I've said in previous videos, the tech bubble happened because tech was, when the internet first started up and it got really big, there was a lot of companies who started off and were making tons of money and it collapsed. So it's actually a much riskier place to be investing into because you don't really know the future of it. But also, these are the places where you're going to get your biggest growth out of if you pick the right company. Some investors will actually mix up their investment strategy between the value and the growth strategy, and it is called growth at a reasonable rate. So with this type of strategy, they will focus on companies that have a lot of growth within their companies. They're doing really well and they're expanding, but they will also ensure that those companies are undervalued at the exact same time, so that there's just much more guarantee that these investments will increase in the future. So basically, they believe that this investment will grow, but as well, the stocks initially do not cost a lot of money to purchase in the first place because they're undervalued. There was a point in time where people didn't care so much with their growth strategy whether or not the stock cost a lot of money to buy in the first place, but now there has been much more focus to ensure more about the value of their stock along with the growth. Because in the recent years it hasn't shown to be very effective to be purchasing expensive stocks even though the company is doing well. So if you're comparing which ones have done better, since 1982 there has been 12 years where growth stocks have beat value stocks. So generally value stocks have done much better in the past. As well, because one strategy does not always do better than the other, many investors will actually divide up their portfolio and have some growth and some value, and that way they've kind of diversified their portfolio a bit more within these two types of strategies, because one of them will generally do well, usually the value according to what studies show, but at the same time when the value aren't doing good, they've got some growth that are doing well as well. And as I'm sure you've guessed, much like value investing, this takes a lot of research, a lot of time, which is why it's, again, not one that I would recommend the average person to go into at any point in their lives. You've pretty much got to be in the industry and be like an industry expert to really know which companies are growing. I don't know enough about business to know that a company is growing and that's a good thing, and not it's growing but it's about to flop because it grew too fast or anything like that. So once again, it's just good to know about types of investment strategies that are out there to give you confidence when you finally pick which investment strategy you're going to do. And I'm not going to stop you from doing this type of investment strategy. If you really think you have the time and the financial intelligence to do this, then I guess go ahead. But I personally don't really recommend anybody do this strategy. And since I don't recommend this strategy to any of you, I obviously never plan on using this strategy. Although it seems effective, I just don't have the time in my day. And although I love learning about finances and all the other stuff, I really don't think I really want to get into the nitty-gritty of business and company finances in order to do either value or growth investments. If you find these videos interesting and informative and you want to learn more, Please click subscribe as I'll be uploading videos every Monday, Wednesday, and Friday. Have a good day. Bye.